Welcome back, everyone. Ready to dive into some serious market mechanics.
Absolutely. Let's do it.
Today, we're cracking open Forex charts. Specifically, we're taking a deep dive into this Baby Pips article, 3 types of price charts, and how to read them.
Great pick. Charts are fundamental, and this guide lays a solid foundation.
Right. It's mind-blowing to think about trillions, literally trillions of dollars flowing through the Forex market daily. Each trade leaves a footprint, and charts are how we follow those tracks.
That's the beauty of it. They give us a way to visualize those massive forces, making sense of it all.
I'll admit, I remember starting out staring at those charts, just completely lost, like trying to read hieroglyphics.
It can be intimidating, but think of them more like learning a new language. Once you grasp the basics, it becomes much more clear.
Easier said than done. Seriously, though, all those lines, those zigzags, the colors, what are we actually seeing when we look at these things? What's the real story?
At their core, charts are visual representations of supply and demand. Every single movement, every uptick, every dip reflects millions of individual decisions being made by traders around the world.
So when we see a price going up, it's not random chance or some algorithm. It literally means more people are buying that currency pair at that very moment.
Exactly. It's a real-time snapshot of the collective buying and selling pressure. But there's more to it than that. Charts also capture how news events, anything from a surprise interest rate hike to some geopolitical development, how those ripple through the market. You can almost see the impact on trader behavior instantly.
It's like watching mass psychology at work, all those hopes and anxieties reflected in the price movements.
Exactly. Imagine there's a big economic announcement coming up. Well, by watching how prices behave before the actual news, charts offer a glimpse into what traders are expecting the outcome to be.
So the market's collective bet on the future is literally reflected in the chart. That's wild. But, okay, we've got these charts that show us the market's fears, its hopes, its maneuvers, but we need to know how to read them. That's where our trusty Baby Pips guide comes in, right? It breaks down these 3 major chart types: line charts, bar charts, and candlestick charts.
It's like having different lenses for a camera. Each chart type gives us a unique perspective on the market. It's not about one being better than the other. It's about using the right tool to understand the story you're trying to see.
I like that analogy. So let's start simple with the line chart. Seems pretty straightforward, but what makes it useful?
The beauty of a line chart is its simplicity. It cuts through the noise and gives you a clean, uncluttered view of price action. By connecting the closing prices of a currency pair over time, you get a clear sense of the overall trend, whether it's up, down, or sideways.
So kind of like seeing those mountain ranges from afar. You get the general shape, the major peaks and valleys, but you miss the details of the individual trees or rocks.
Exactly. Line charts are amazing for recognizing those long-term trends, but they don't reveal much about the intraday movements or the price fluctuations within each trading period. To see those details, we need to zoom in a bit, and that's where bar charts come in handy.
Oh, so they give us a closer look at the price action within those broader trends. Tell me more about that.
So with bar charts, we're going deeper, right? Instead of just that closing price, we're seeing what went down during that whole time period. Exactly. Each bar is like a little price history capsule for that specific time frame.
I'm ready to pop some capsules. Break it down for me. What am I looking at with each bar?
Each bar has 4 key elements: the opening price, the closing price, the high for that period, and of course the low.
Okay, and the source had that cool visual, so the opening price, that's the little horizontal line on the left side of the bar.
You got it. And then the closing price, that's the little line on the right.
And the vertical line connecting them, that whole length, that's the range between the highest and lowest prices during that time.
Perfect. Now, here's where it gets really interesting. The length of that vertical line. That tells us about the volatility. Short line means things were pretty stable, like a quiet day on the market, but a long bar, whoa, that's some action. Big price swings, maybe some news dropped, got everyone fired up.
So that's where we see those market emotions in action, like we talked about earlier.
Absolutely. Longer the bar, the more intense that back and forth between buyers and sellers was during that time frame.
And don't forget about those colors. I'm seeing green bars and red bars.
Right. Green typically means the price closed higher than it opened. Bullish, optimistic. Red, that's the lower close things went down.
Got it. So it's basically the same data as a line chart, just way more visual, more granular. We see not just where the price ended up, but the whole journey it took to get there.
Precisely. Speaking of visually engaging, let's talk about the rock stars of the charting world, candlestick charts. Those really up the visual ante.
They do. Way more interesting to look at than just a plain bar. So candlesticks, they're showing that same open, high, low close data, but just displaying it differently.
Exactly. They use these cool candles with a thicker body, and then those thinner lines above and below, sometimes called wicks or shadows.
Right, right, I see those. And just like with bar charts, the color of that candle body tells us if the price closed up or down for the period.
Yep, green usually signals a higher close, red a lower one. But the real magic of candlesticks is how they highlight potential turning points, those moments where the market might be changing direction.
Yeah, and they've got these awesome names for the patterns like, what is it, shooting stars and hammers, and it's like a whole secret language.
It is. Those names aren't just for fun, though. Traders have been observing these patterns for ages, realizing certain formations often come before specific price movements.
So like if I see a shooting star, does that mean I should sell everything and run for the hills?
Hold your horses. Context is everything. These patterns offer clues, but they're not foolproof. No trading strategy is. We'll unpack those patterns and what they mean in another deep dive.
Looking forward to that. But for now, so we're clear, even without knowing all the patterns yet, these candles can make it easier to spot shifts in momentum, like they're whispering secrets about where the price might go next.
Exactly, you're catching on.
All this is super cool, but I have to be honest, it's a lot to process. If you're just starting out facing all these charts, it can feel kind of overwhelming, right? Like, where do you even begin? So many charts, so little time. It's like having all the tools but no instruction manual.
Yeah.
For someone just starting their charting journey, where do they even begin?
Well, I always say start simple. Don't try to learn everything at once. Maybe begin with those line charts, get a feel for those big picture trends.
Right, get comfortable just seeing, okay, this is an uptrend, this is a downtrend, makes sense.
Exactly. Once you feel good about that, then you can gradually start incorporating bar charts. Maybe experiment with those candlesticks. See what clicks.
Find what works for you, what you feel comfortable actually using.
Absolutely. Some traders live and breathe by candlestick patterns. Others prefer a cleaner look, sticking with those basic line or bar charts. The great thing is, you can customize your approach to match your own trading style, your risk tolerance. Just experiment, explore the tools, find what resonates.
It's about finding that balance, right?
Mm.
Having enough info to make good decisions, but not getting bogged down in the details.
100%. Charts are powerful tools, but they're not predicting the future. No crystal ball here. They give us clues about market sentiment, maybe tip us off to a potential reversal, help us identify those key support and resistance levels.
But ultimately, it's still about probability, not certainty.
Exactly. And anyone who tells you different, well, they're selling something. Even seasoned pros know that.
So true. So where does that leave us? What's the next step for our listeners who are ready to dive into the world of Forex charting?
Practice. Nothing beats hands-on experience. Maybe start with a demo account, do some paper trading, test out these different chart types and techniques, but without risking your hard-earned cash.
Get a feel for it.
Exactly. Think of it like learning to read the ocean. The more you study those waves, the better you get at seeing those patterns, anticipating where they might break.
And charts, they're kind of the same, aren't they?
Wow.
Once you learn their language, you start to notice these subtle shifts, those hints about where the market might be headed. Things you never would have seen before.
That's the beauty of it, and that's what makes it so rewarding. It's a skill that can give you a real edge in the markets.
Couldn't agree more.
Yeah.
Well, this has been awesome. I feel like we've just scratched the surface of Forex charting, but in a way that's really exciting.
It is, and there's always more to explore, right? Like we mentioned, those candlestick patterns, the world of technical indicators, it never ends.
Which is why we love it. But for today, if our listeners take away just one thing, I hope it's this. Charts are not the enemy. They're not these scary, complicated puzzles. They're telling a story, and once you learn how to listen, who knows what opportunities you might uncover.
Well said. Happy charting, everyone.